Wait. Stop. Listen. Today, the S&P 500 and Nasdaq just hit all-time record highs. Again, while crude oil is getting demolished, while peace negotiations between the US and Iran are suddenly looking promising, and while your savings account is still sitting pretty at 4% because the Fed refuses to blink, something big just shifted in the market's mind, and if you're not paying attention to what just happened in the last 24 hours, you're about to get left behind. Welcome back to TechMeHome, MarketPhase, Daily News. Okay, let's break down the magic trick. Two things happened today that don't usually happen together. Tech stocks are soaring because earnings are absolutely crushing it. AI demand is insane. We're talking Nvidia, Micron, the whole semiconductor complex is on fire. But simultaneously, crude oil prices just tanked because geopolitical risk just disappeared. The Iran peace negotiations are looking serious, and when the world stops worrying about oil supply shocks, suddenly oil gets cheaper. Here's the cynical part. The Fed gets to keep rates elevated. They get to keep pretending inflation is under control. They get to keep pretending the money printer isn't running 24/7 in the background. And the market just said, you know what? We don't care. Tech is printing money. Let's go. This is the duality of 2026 in one day. But before we go deeper, I want to talk about something that actually protects your wealth in a world where central banks control the narrative. Listen, whether markets go up or down, your portfolio deserves real diversification. That's why I trust Fidelity's fractional share investing and their low-fee index funds. You can start with literally any amount of money. No minimums, no BS. When everyone's chasing AI stocks, Fidelity gives you the tools to build a boring portfolio that actually survives recessions. Go to fidelity.com and see what you're actually paying in fees. I guarantee you'll be shocked. Because fees are how wealth disappears silently. Now. Micron just became a $700 billion company. Let me say that again. Micron, a memory chip maker, is worth $700 billion. Why? Because AI models need memory. Tons of it. Every data center that's trying to train large language models needs high-speed memory that Micron makes. Think of it like this. If AI is the gold rush, Micron is selling shovels. But these shovels cost billions to manufacture. The point? Memory chip demand is now a leading indicator for how serious companies are about AI infrastructure. When Micron stock rallies like this, it's basically the market saying, yeah, we're actually building this. This isn't hype anymore. This is real spending. Speaking of real spending, Palo Alto Networks just acquired Portkey. Portkey is an AI agent platform, and Palo Alto Networks is a cybersecurity company. Now, most people saw this and thought, why is a security company buying an AI startup? Because the future of enterprise software isn't just AI, it's autonomous AI agents, things that act without human intervention. And if your company is going to deploy thousands of autonomous agents, you need to secure them, lock them down, make sure they don't go rogue. Palo Alto is positioning themselves as the infrastructure backbone of the AI agent economy. That's a $100 billion market opportunity sitting right there. And they're not waiting. They're acquiring their way in. Now, oil prices, they're down big. Because peace is good for markets. Geopolitical risk premiums evaporate when conflict doesn't happen. This is actually huge for consumer-facing businesses, transportation stocks, airlines, shipping companies, energy-intensive manufacturers. All of them just got a margin boost because their input costs just dropped. The Fed wanted to control inflation without crushing growth, and today the geopolitical gods handed them a gift: lower energy prices without the Fed doing anything. But here's the thing they're not talking about. Mortgage rates and HELOC rates are still climbing. Your savings account is still holding near 4%. The Fed still hasn't moved, because inflation isn't dead, it's just sleeping. And then there's Kevin O'Leary's Utah AI data center venture. Private capital is now chasing AI compute capacity, because the demand is so insane that even with hyperscalers like Microsoft and Meta building their own data centers, there's still a shortage. This means capital is flowing to power infrastructure, cooling systems, companies like Vertiv, and real estate in areas with cheap power and cold climates. It's like the crypto mining rush, except this time it's socially acceptable. It's AI. So everyone pretends it's the future instead of what it actually is, a massive infrastructure bet on compute capacity. So where does this leave us? Records highs in equities, lower oil prices, geopolitical optimism, but still elevated interest rates, and a Federal Reserve that's trapped between a rock and a hard place. The rock? Inflation might still be hiding. The hard place? If they keep rates elevated, they risk crushing growth. Today, the market voted that growth wins, that tech is real, that AI spending is real, and that peace is a better bet than war. Maybe they're right. Maybe they're building castles on sand. But that's what makes markets beautiful and terrifying at the same time. Thanks for tuning in to TechMeHome MarketPhase Daily News. None of this is financial advice. It's purely for entertainment and education. Always do your own research. Never risk more than you can afford to lose. And remember, the house always has an edge. Even when the house is the Federal Reserve. I'll see you tomorrow.